What just happened with SoFi stock? Was today's drop a warning sign or just market noise? While many investors are scrambling to make sense of this sudden pullback, buckle up because today's story of SoFi isn't just about one company. It's a snapshot of where the market might be headed next. Let's dive right into it. Hello everyone. Welcome to Daily Stock Update. If you are new to the channel, be sure to subscribe to the channel and turn on post notifications by hitting the bell so you never miss any of our uploads and also enter our giveaway. But before that, alert this is not a financial advice video. SoFi Technologies witnessed a drop of about 3.54% today, closing near $12.74 after reaching a daily low of $12.74 and a high of $13.32. Interestingly, volume ticked up to around 71.8 million shares traded, a jump compared to its average of 63.8 million. So while the price slid, there was definitely increased trading activity. That by itself is worth noting because it hints that today's movement wasn't simply market apathy. As the trading day began, overall sentiment was actually optimistic. Early market signals pointed toward a decent rally, but that tone quickly shifted. The turning point? A weak 20-year bond auction. Investors weren't particularly eager to buy, and as a result, the government had to sweeten the deal by raising the discount rate to 5.1%. That's where the trouble began. Why does that matter for SoFi or any growth stock for that matter? Because higher discount rates reduce the present value of future earnings. When future profits are less valuable in today's dollars, valuations, especially for companies that thrive on future growth potential, take a hit. SoFi, being a high-growth fintech, naturally fell victim. The bond auction fallout created ripple effects across the market, and heavily weighted growth stocks were hit the hardest. That brings us to a broader market divide. One side on social media believes this dip was unwarranted, an overreaction. The other side warns it's the beginning of a prolonged downturn, citing forecasts from banks like JP Morgan that expect a deflationary environment, which would drive yields even higher. Neither side can be declared right just yet. More data is needed. And speaking of data, tomorrow is a major data release day. A lot of fresh economic indicators will be out early in the morning, which could either validate today's fears or ease the market's nerves. Back to SoFi specifically, it's important to note there was no breaking news, no SEC filings, no investor presentations, and no analyst updates that triggered this sell-off. SoFi's drop was largely a symptom of broader market jitters. Even short sellers weren't hyperactive today. Short interest only went up by about 31,000 shares, which now puts the total shorted float at 13.62%, or roughly 147 million shares. Now, here's something to pay attention to. Despite high short interest, SoFi didn't see massive short activity today. That's unusual, especially when other heavily shorted stocks were under serious pressure. In my opinion, this hints at strategic restraint. Shorts may be waiting for SoFi to reach certain technical support levels before they aggressively step in. They're being tactical, likely aiming to breach key support lines and spark panic. Let's quickly glance at the options data. Around 17 million in call premiums traded versus 6.42 million in puts. That's roughly 47% bullish sentiment in the options market. However, most of those optimistic bets were made before the bond auction debacle. Post-announcement, put activity began to tick up, indicating some traders were trying to hedge or reposition. Interestingly, there was 1.4 million in premiums concentrated in the $2.50 to $2.55 range, and a host of smaller-sized trades followed. I often share these detailed options flows on my Patreon for anyone who wants to keep track of hot single-leg trades. In fact, just yesterday I flagged unusual bearish flows, and today's market action seems to have justified those concerns. Looks like institutional players may have seen this coming. Now, sentiment is split. Bulls are still betting on SoFi to recover to the $13.50–$14 range, while bears believe we're heading below $12.50. Given the trading after hours, SoFi was hovering near 12s and 84, which suggests some mild recovery attempts, but nothing significant just yet. Let's talk big money. On the dark pool, that's where institutions often move without drawing attention, we saw several large block trades. For example, a $22.9 million transaction and others like $6.2 million and $1.2 million all occurred just around or shortly after the close. That tells us institutions are still active and not entirely backing off SoFi. Whether these were buys or sells isn't entirely clear, but the size alone means SoFi is still on Wall Street's radar. So what's the play here? Honestly, it all comes down to your conviction. If you believe in SoFi's long-term story, the student loan ecosystem, banking infrastructure, digital-first approach, then dips like these might be prime dollar-cost averaging opportunities. You're not going to time the bottom perfectly. That's just not how the market works. What you can do is pick your entry points and build your position gradually. For me personally, I've got 1250 puts for this week. If the price stays below that level, I'll be assigned 500 shares. Next week, I've also sold $12 puts, which could mean another 1,000 shares if SoFi stays under pressure. It's a calculated strategy, building my position bit by bit when fear is in the air. In closing, I believe the real action for SoFi starts now. If it holds these supports, a technical rebound is likely. But if the shorts are waiting in the wings, as I suspect, we may see a deeper battle, a tug-of-war between retail conviction and institutional aggression. Either way, volatility is here, and with it comes opportunity. Friends, that's all we have for you today. What is your opinion about today's video? Get involved and let us know in the comments down below. Thanks for watching.